if you are planning on buying a house, I do suggest that you do your own research before you even contact a real estate agent as well, just so that you will have some knowledge. You want to go into the buying process with some of your own knowledge. You don't want to solely depend on a real estate agent to tell you the way, or a loan agent or a mortgage broker to explain every detail to you. You should come into this knowing somewhat of what you're about to get into. So first things first is the down payment. So if you're applying for a conventional mortgage loan, this is like the most popular type of mortgage loan, having a 20% down payment is the goal. Anything under a 20% down payment on a house is considered risky by the lender and will require you to have private mortgage insurance, okay? So for example, if you are buying a home that is $200,000, 20% of $200,000 is $40,000. That's the amount of the down payment that you must have. So if you are applying for a FHA loan, which is backed by the government, your down payment could be as little or as low as 3.5% of the total amount of the home. So if you're buying a home for $100,000, your down payment would be $3,500. That is 3.5% of $100,000. So if you are applying for a VA loan, which is a Veterans Affairs loan, the down payments differs. Some veterans are eligible for exemptions on their home loan. And then another popular loan is the USDA, which is the United States Department of Agriculture mortgage loans, and the down payment could be as little as 1%. Now there are also other types of mortgage loans, which I will talk about in a whole different video, but I'm just mentioning the most popular loans that people get in this video, okay? Also, financial gifts. I understand that sometimes people give financial gifts from their parents in order to buy homes. Your mom might give you $30,000 gift as a wedding gift to put as a down payment on your home. Try to avoid receiving gifts 3 months prior to buying your home. So when you are applying for a mortgage loan, it doesn't look too good to have a large lump sum amount of cash hitting your bank account. It just doesn't look good to the lender. I don't know why, but that's just a no-no. So if you're going to get a large gift, you know, for a down payment, like try to apply for a mortgage loan like a few months after you get it, you know what I'm saying? Also, another thing, your debt to income ratio. A lender will not approve a loan that makes a buyer's debt to income ratio exceed 36%. All right, so income is what you earn from working, and your debt is what you owe to your creditors, okay? So if you can, like, try to pay down as much credit card debt, maybe you gotta pay down your student loans, pay off your car, but your overall expenses for your house cannot exceed 36% of your income. Also, for a conventional loan, the minimum credit score is a 620. That's the minimum credit score to get a conventional home loan. However, to, I believe, get a FHA, VA, and a USDA loan, you can have a credit score as low as 500. However, you're gonna need to get private mortgage insurance, and your interest rates will be much higher. Now, the lender will check your credit. And so credit reports will show how timely your payments have been over the past 2 years, aka the last 24 months. So the lenders are checking for timely payments, consistent timely payments for 2 years. So you might want to pull your credit report and make sure that your credit isn't in shambles. And if it is, start fixing it so that you will be able to qualify for a mortgage loan in the future. So we all know the top 3 credit bureaus are Experian, Equifax, and TransUnion. So you might want to pull those 3 reports to check your credit. Make sure there's nothing on there that is suspicious, and if it is, try to get it removed or taken care of. So you can download a free credit report at www.annualcreditreport.com. Also, you can call 1-877-322-8228 to request a free credit report. Or you can write in to the Annual Credit Report Request Service, P.O. Box 105281, Atlanta, Georgia 30348-5281. Other reputable websites where you can log on to just monitor your credit are Credit Karma, which is www.creditkarma.com, or www.mint.com. And each time you do check your credit, these sites won't affect your credit report by you just going on to monitor and just check your credit. All right, so let me give you a couple more important things about your credit score that will matter to a lender. So these are a couple of high impact things that are on your credit report that matter. Timely payments, okay? Percentage of your credit used. I believe that you should not use more than 30% of your available credit. Anything over 30% just is not good. So try to keep your credit limit under 30%. So if you have $10,000 worth of available credit, we need to keep it under $3,000. Okay? So medium impact things. So it's the average age of your credit. So maybe you just got credit, like you just got a credit card 1 year ago. That's kind of young. Maybe you have an average age of 8 years of credit lines, you know. And if you're a little older, maybe it could be 20 years. So the average age of your credit is medium impact. It's important, you know. Low impact would be the number of credit checks on your credit report. Also low impact is the mix of credits on your credit report. So maybe you have student loans, a mortgage already, a car loan. So that is a mix of credit on your credit report. Also, you want to avoid hard credit checks when you are thinking about applying for a mortgage loan. And that would be like apartment applications, because when you apply for an apartment, that is a hard credit check. Another one would be buying a car. Don't buy a car. Are you listening? Do not buy a car if you are intending on applying for a mortgage loan. So I feel like you should maybe concentrate on those things before you actually apply for a mortgage loan. And you will need a pre-approval letter, or you should have a pre-approval letter before you meet with a realtor, because a realtor is not going to want to waste their time showing you places and then to find out that you aren't even qualified, or you won't be able to be approved for these homes, if you get what I'm saying. So that's that, and I hope that this video was helpful. If you found it helpful, then give me a thumbs up. Also, I want to say that if you are a first-time home buyer, there are first-time home buyers programs out here for first-time buyers. When you do go to your bank to apply for a mortgage loan, I would suggest that you ask the loan officer or the mortgage broker if they know anything about those programs, because they should be able to tell you about it. You know what I'm saying? So I will be talking about the types of mortgage loans in another video if you are interested. So if you found value in this video, give me a thumbs up. If you learned something, then hit the subscribe button, and I will see you guys in my next YouTube video, okay? Toodles.